Hey guys, so welcome back. This video is gonna capitalize on the last video I made on finding fair value gaps and how to enter them. Um, if you haven't seen my last video, I highly recommend you go see it because I do more of a specific introduction to fair value gaps. And this video just we're just gonna use the chart to find them. So if you want more of a detailed analysis on what are fair value gaps, you can go see it on the last video. This video is solely just looking for them and identifying them. Let's use Bitcoin and gold. So let's get to it. First and foremost, it don't really matter where we look at. Right now I'm on the 4 hour, so why not? Let's use the 4 hour one. So remember, first you gotta look at what trend you're in. Let's see this one for example, right? What do we see? If we're only, let's just, you know what? Let's isolate just this area right here. Okay, so let's not worry about anything over here. Let's not worry about anything over here. Just everything in the box, okay? So let's look at fair value gaps in this box. Okay. So first and foremost, you have to see the trend, right? So what trend is this? What does this look like to you? What trend? If you said bullish trend, you are correct. How do we know it's a bullish trend? Because this low, this is a low, took out this high. This low took out this high. This low took out this high. This low took out this high. So let me be more. That's a higher high. That's a higher low. It's a higher low. High high. High low. High high. High low. Okay. And this is the high over here before it broke down and started going back downhill. So as soon as we see something like this, right, off rip, what do we see? All right, let's start from the beginning, right? What do we see off rip? What's this right here? Right? We know that it's going up because the higher lows keep taking out the higher highs, right? So let me get rid of this one because you know what? Yeah. So this high right here got this higher low took out this high right here, right? Yeah, you know what? Let me get rid of this. Okay, yeah. So excuse me. This is more of a correct way to do it. Okay. So this low took out this. So this low, sorry. So this low took out this high here and formed this high. Then it formed this higher low down here. And this higher low took out this higher high and formed this higher high. Right? That's how you know it's an uptrend. When the higher lows right here Let me be more specific. Yeah, I'm gonna make a video on identifying trend. So these are higher lows, right? So as long as they keep taking out, as long as these higher lows keep taking out these higher highs over here and forming higher highs, it is a bullish trend. See, this low took out this high here, formed this high, then took out this higher low. Hold on. Yeah, so see, this low took out this high, right? Then when it took out this high, it formed this higher high, then formed the higher low. Then this higher low took out this higher high, and then formed this higher high. And then it came back down to form a higher low. And then this higher low took out this higher high and formed this high before it finally went back down. Okay, so how do we find fair value gaps in this? It's very simple. If you looked at the last video, we're only finding 3 candles. This is the first one, this is the second one, this is the third one. And there's a gap between the first and the third one. Then you make a rectangle, use a rectangle tool on a trading view, form a rectangle that touches the tip of the wick here. Then you drag it out like this, and you wait for price to come back down here like this to form the low. Then you would have your entry here, right? And you would basically have your stop loss below, and you basically hold to this high, because so you would enter down here, right here, and because it formed a low and a fair value gap here, and it touched the fair value gap here, that is going to take out this high right here. So you would enter here, put your stop loss below this low here, towards this high here, right? If you did that right, if you did that and you entered that, you would have made $97. Excuse me, not $97, but you would have caught 97 points, and your all would be 1 to 3. So we could find another one too. What's this right here? Yep, you guessed it. So if I look, 1, 2, 3 candles, the gap between the first and the third candle right here, like that, right? And you would wait for price to come back down here before it took out this high. All right. Now you didn't have to take this one, but this was if you decided to because the reason why I say that is because this pullback never touched this high, but you could stack if you wanted to. So you could enter this another time towards this high right here. All right, another spot. What is this? Yep, you guessed it. Take out your thing. Let's count it. First candle is 1, 2. That was this 3. Take your rectangle from here to here. Drag it out. Then you would have entered it again. Look how this fourth candle is. Look, 1, 2, 3, 4. This fourth candle went into the fair value gap. You could have entered this towards this high, or you could have held for 1 or 2 or 1 or 3. So look, if you had entered here, your stop loss would be below here, the fair value gap. It'll come up here, 1 or 1. If you kept holding 1 or 2, 1 or 3, and it still hit. Let's find another one. Would this be a fair value gap? Technically, yes, but notice how price never went back down into it. So let me show you. This is a fair value gap 1, 2, 3. But remember, we're waiting for price like this one going into it, going into it, going into it. This price never went into it, so you wouldn't really enter. It wouldn't be a good trade because it could always turn against you. All right, so we wouldn't use that as a fair value gap. So let me actually get an X. So this right here, you wouldn't use. You could if you wanted to. Price never came down here, so you wouldn't use this fair value gap. Alright, so this is another one. Right, we know it's an uptrend, so we're looking for bullish fair value gaps to enter. So if you look closely here, what do you see? That's right, 1, 2, 3. So you would draw a fair value gap here from this right here to here, then drag it out. Right? So what do you see? You wait, price went back down here, you would enter it again, and you could have your stop loss down here below the first candle. 1, 2, 3. You could have it below the first candle. Notice how price never really went down until here. So as soon as you enter the fair value gap, right, price never went down. You can go for 1 or 1. You could go for 1 or 2. You could go for 1 or 3. And if you're really feeling bold, 1 or 4, 1 or 5 before it finally tanked on you. Okay. So this is to identify fair value gaps on an uptrend. Now we're gonna find one on a downtrend. Okay. If we wanted to, we could use this whole huge downtrend here. But let's actually just go somewhere else, just for the sake of the video. Okay, so let's use this whole entire thing right here. Right? I'm gonna draw a rectangle on the one we're gonna use. We're gonna use this whole entire area right here. This is what is this considered to you guys? Price keeps going down, right? Right. The high was the high low was broken around here, and it formed the lower high, came back down from a lower low, lower high, lower low, kept going down. So that indicated that it is a downtrend. So what I'm gonna do is I'm gonna show you guys. Don't worry, I'm gonna make a whole video on how to identify this, but how to identify market structure is really pretty easy. Trading is really easy. A lot of people make it complicated because of all the terms. You just have to keep practicing, honestly. So this was the original high. So I'm gonna go ahead and put high. H for high. Alright. I decided to break this high or low. Right? This is the high or low for here. This high or low broke this high, formed this high, then it tanked here. Alright, so we would put lower low, lower low. Then after this lower low was formed, what did it do here? It went back up here, right? And formed a lower high. Right? Right? Then this lower high broke this lower low and formed what? Yep, you guessed it. Lower lows. Right? Then it decided to form, it went back up here and formed what? Yep, you guessed it. Lower high. You know? It's just this to find out if it's a bearish trend, a lower high breaks a lower low here to form another lower low. Then the lower low comes back up, forms a lower high, and it comes back down. If it doesn't break the lower low, it is not considered a lower high. I mean a low. If yeah, if it doesn't break, if this lower high doesn't break a lower low, it is not considered a lower low. So what is all this here? It never went past this, right? This still wouldn't. This here wouldn't even be considered a lower high because again, this lower high here never broke this lower low. So this is all ranging. It's just sitting there. So you would ignore all of that. Then once this lower high finally broke this lower low, where did it break it? Right here, right? So you would get your mark, put it here, lower, low, right? Then what does lower low do? Came back up here, lower high, lower high. Then this lower high here broke this lower low. Look, see, it broke it. So now it's what? Lower low, right? Okay. Then what did the lower low do? From a lower high here. This one's the highest point, so it is a lower high. Lower high. This is how you literally move in the market. Like this is how you make money. It's so easy. Then what did this lower high do? Finally decided to make a lower low before it decided to come back up and break this lower high here to start a whole new uptrend. Right? So now we're gonna put a little low here. Boom. So that's the end of the downtrend. So this right here will be considered what? A bearish trend. So so what I'm gonna do now is I'm gonna make a bearish trend. Okay, so this is a bearish trend. Now, how do we find fair value gaps in this bearish trend? Yep, you guessed it. Same way we did it in the bullish trend. So we just start looking for them, right? So as soon as we find out this is a downtrend, we just start looking for them. So you would really know this is a downtrend once you see this low low form here and break this low high. So now we look for fair value gaps. This is a fair value gap here, right? This right here is a fair value gap right here. But what happened? It literally came up and broke it. So this would be invalidated. So you wouldn't even consider this a fair value gap. Well, I mean, you could. Again, it's only 3 candles and there's a gap between it. But I wouldn't use that simply because, like I said, it passed it and it broke the first candle, the 1, 2, 3 fair value gap. And this price went above the first candle. So I wouldn't use it. So this is considered a horrible fair value gap. So what can we do? So if you really decided to do this, right? If you was really believing, because remember it's a downtrend, so you know price has to continue down. If you really believe that this low is really good, which is done from a bunch of experience, a bunch of like practicing, you will be able to find another fair value gap. What is this? You guessed it. 3 candles stretched out. Now, would this be considered something you can use? Yes. Why? Because price went back up here, touched this fair value gap here. Look, first candle 1, 2, 3. There's a gap here. Price went up here. Yes, it came all the way up here. But guess what? It didn't pass the initial first candle that you used to form the fair value gap, which is this one up here. Remember, 1, 2, 3. Gap between the first and the third. Your stop loss will go above here. If price never went above here like it did here, this is the first candle here. Notice how price went all the way up here. Price never went past this. So guess what? You can use this. You can enter here for your auto for your 1 or 2, 1 or 3, 1 or 1, whatever. So you could have entered it because you know it's a downtrend because of this lower low. It broke this low higher low. So now you look for a fair value gap, which is up here. It came back down here from the lower high, continue down. No, let's look for another fair value gap. All right, this broke this lower low, right? And formed this lower low, and formed another lower low. Then it started going back up. All right, so what are you looking for now? Another fair value gap. Is there any here that you can use? Technically, no, because again, you can't use this fair value gap that's here because price went above it, above the first candle. So you can't use any of that. You just gotta wait. You just gotta wait. All right, price is coming back down, and what do we see here? A fair value gap. How can we identify a fair value gap again? 3 candles. The first one, the second one, the third one. The gap between the first and the third. So you put it here, stretched out. And then what would you do? You would enter. You would enter this right here, and your stop loss will go above here, like this. Okay, so you would have entered to this low here, which is like a 1-to-1. Okay, so it will be below here. You could do a 1-to-1 here to this lower low, because it's gonna break it since it's a downtrend, or you could hold for 1 or 2. Excuse me. This was the beginning of the first candle. Yeah, so after that, fair value got formed. This was the beginning of, sorry, it was 1, 2, 3. So I would take my stop loss and put it above the first candle, which is about right here. It'll be above this candle here because that was the one I used. 1, 2, 3. Gap between these two, stretched out. Right, so you can have it for 1-to-1 towards this lower low, which is 1 or 2, or you could hold all the way to 1 or 3, or you could just keep holding, you know. So let's look for another fair value gap. Another thing too, if it's a good fair value gap, price, you would always see, even if it ranges, price will always come back to that fair value gap. See, came back up here over here before it continue back down. All right. So what you could do is you could stack. Like for example, what's this? 1, 2, 3. Another fair value gap. Stretch it out. So look, this is the first candle here, and the second one, and the third candle here. So it'll be the gap between these first and the third stretched out. So you would enter here again if you wanted to stack and enter again. Alright. What's another fair value gap that we can use? Look, this is a fair value gap here, this is a fair value gap here. But notice how price never went back up here. For example, yeah, you could use this fair value. Go look, watch this. One. Boom. But remember, right? You're gonna be trading here. Imagine this stuff never formed, right? You're only seeing this. You wouldn't enter this because price never came back up here. So you would ignore this. This would be ignored. So don't enter this because it's gonna be ignored. You know what I mean? Because price never. This right here. Let's just imagine this is the X. Could enjoy it good, but you wouldn't enter this because price never went back up here to continue back down. So you would literally ignore that. This is another fair value gap, but notice how price never came back up here. Let me draw it out. Another fair value gap here. So you wouldn't use that. Price never went back up here. It just consolidated and tanked again. Right? This, yes, you could use this one again. Yeah, I'm going to show you guys all the different types of fair value gaps you see so that way you be able to not get played and stuff. This is a tiny fair value gap. Like if you see, if I use this 1, 2, 3, you can see that this doesn't come, it doesn't cancel the other one out. If you really look at it, it doesn't cancel the other one out. So you could use this. Let me see if I can zoom in so you guys can see that properly. So you notice there's like a little gap right here. See that gap? Right? Why wouldn't we use that one? Yep, you guessed it. Price went back up. Instead of rejecting it and dropping, it flew past it. You know, it flew past it. So this would be invalidated. I wouldn't even use it. So that would be another one you wouldn't use. You would just wait. This one too is a fair value gap, but again, price went past it, so you wouldn't use it. And what did it do? Price went back up here. Honestly, you would probably ignore all this and just wait for another chance to come back down and form another fair value gap. Why is that? Because if you was following market structure, right, you see that a lower low was formed and this lower high was never taken out over here. So you're looking for a fair value gap to continue back down. Okay? As long as this don't get taken out, it is still a downtrend. Okay? So you would look for another fair value gap to enter. Is there any here? There was one here. You can see another fair value gap here. Right? Now would you use that one? Technically no. Yes and no, because one, remember, price came down and then went into it and it passed the fair value gap. Alright. If you wanted to use it, you could, but be aware that if you do, price can indeed continue back up. In this situation, the wick went into the fair value gap and then it closed below. So this body, we only look at the bodies, right? So for example, you notice how down here, these bodies, see the candle? Remember in the last video, if you watched it, there's wicks and bodies of the candle, right? The bodies are the big bulky thing in the middle. The wicks are the little things on the top, like the lines on the top. If the bodies go above it, then it is considered invalidated. But if the wicks go here, reject it, and then the bodies form underneath it, then you can still use this as a valid fair value gap because the bodies never closed above it. See, that's like a little tiny check. So you can use this because the wick was the one that touched it. but not the bodies, like down here. The bodies was the one that went above it. Nothing went above it. Notice how the wick went here, but this wick wouldn't even considered it because why? It was used as the third one for the fair value gap. So 1, 2, 3. So this wick wouldn't count. Okay. So yeah, you could use this one. This is a nice little, because nothing is really gonna be perfect, you know. You just have to be able to use your eyes from like practicing a lot. But yes, this is considered a fair value gap. Notice how everything came back down and dropped. Okay. Price went back up, right? Notice how it still did not take out this lower low over here. It just came down here and it continued back up. What is that called? Ranging, right? So you can still look for another fair value gap that you can use, right? So you could continue down. So let's go. Where can we see another fair value gap? No fair value gaps here. There were no fair value gaps here to use. This first, second, and third candle, the wicks overlapped with each other, so you can't use it. The wicks were touching these three wicks. Can't use them. See, these wicks touch each other. Let's say 1, 2, 3. Notice how this wick and this wick, they're like literally touching each other, so you can't use that. A fair value got formed here. You could draw it out, but again, price never went up here, so you would still be waiting for an entry. Okay, can we use this one? Let's see. You can't use this one because price never went back up here. Can you use the next one that was formed? Let's see. 1, 2, 3. Grab it. Stand it out. And what do we see? If this stuff here never happened and you're just looking at this waiting for price to come down, right? What do you see? Price went back up into the fair value gap. You would enter. This would be your entry. Your stop loss will be above here, above this first candle right here, and you will go down. Let me see if I can see. So once price came and touched in here, my stop loss would be above the first candle up here, and then I can either go for 1 or 1, 1 or 2, 1 or 3. Let's see how far it goes. 1 or 4, 2, 1 or 5. It went all the way down to 1 or 5. No, before it came back up and took you out. No. So this would be considered a lower low now. This lower low. So now you're looking for another fair value gap to consider the downtrend. It's going up. This is going up, but you would ignore this because again, you're only looking for sells. Since this lower low was formed, you're only looking for sells to continue back down. Let's see. See that the lower high was formed here. Alright. Is there a reason why it formed here? Looking for the fair value gap. What we see here? 1. We don't see any fair value gaps here that we can use for real. But this right here is 1. 1, 2, 3. So you take out your rectangle. Fair value gaps right here to the third one right here. Third wick, and then you stretch it out. And you would enter here for the sell. And you can go for, if your stop loss is going to be above the stop loss would be above the first candle, which is this one here. And when you entered, you could go for either 1 or 1, 1 or 2, 1 or 3, 1 or 4. Yeah, 1 or 4 before it took you out here again. Now stuff like this happens at times. I'm gonna make a video as to why that happens. It's just liquidity being wiped out. But again, this lower high up here was never taken out. See, so it is still considered a downtrend. So you would, as soon as this rejection happened, what would you do? You guessed it. Look for another fair value gap. What's this? You guessed it. If you can do it, let's do it. This is the first candle. 1, 2, 3. So the gap between the first and the third candle down here stretched out like this. Yep. You would wait, and boom, what happened here? Price went back up into the fair value gap. So guess what you would do? You would enter here. Your stop loss would be, honestly, you could have it above this candle, or you could just have it above the fair value gap. It doesn't matter. Depends on how tight you want your stop loss to be, but this is fine for me because price can always, the thing is, price can always come back all the way up here and touch this area here. So you want to give it room before it continues back down, right? So you can go in this situation, you can go for 101, 102, 103, 104. Oh, it looks like it just went to 103. So you would have made 103. You would have caught around 89 points on Bitcoin. Right? If you was if you really, as soon as this lower low performed, you could have held, honestly, from up here, the first fair value gap right here that had formed. Let me see if I can show you guys. As soon as this lower low was formed here and this fair value gap entry formed around here, and this fair value gap formed around here, you entered here at this lower high, you would have been able to catch, and then you put your stop loss above this right here. Since that was where the fair value got rejected, if you had held what are we doing? You would have caught around 305 points on Bitcoin, and then you could have been entering little entries down here, like right here. You could have stacked. Watch how crazy the stacking stuff is, right? Yes, you would have held, but if you, what was the next fair value gap we saw? The fair value gap here, right? So you could have entered again and held towards this target. Then what could you have done again? Let's look for the other fair value gap that you had entered, right? Which was around, was 1, 2. This is another fair value gap you entered, right? So guess what? You would have entered again. That's 3 entries now, right? What was the other fair value gap you entered? This one over here, this check right here. So you could have entered again right here, and you would have held all the way back down here again. That's that. Excuse me. This would have been, that would have been 4 entries now. You know, like you would have had 4 entries on Bitcoin. All right. Then say you decided to enter again at this, at the other fair value gap that you found, which is around this area right here. You would have entered this one right here. Stop loss would have been above here. That's 5 entries now, back to the bottom. What was the other fair value gap you found? This big fair value gap here. You would have entered right here. That was 6 entries now. All the way down here. You would have had 6 entries on Bitcoin. You would have made more money than possible before price went back up. See? Fair value gaps are really easy. You know, it's not really hard. And as you can see in these 2 situations, the bearish and the bullish trend I just showed you, it just shows how price moves. Like it just always moves within fair value. Guys, look, Fair value gaps, all the auto blocks. I'll teach you auto blocks in a different video. But right here, fair value gap, fair value gap, fair value gap. You know, like, let's see if you had entered this bullish trend. Let's see how many points you would have made. Like, if you had entered the initial break right here, the low that was formed here, right, and you cut that from the fair value gap, this would have been one entry. Look how far, like, it would have went all the way up here, right? All right, that's one entry, would have made you 113,000 pips, right? Now watch how crazy this is. Like we did with the bearish trend, the bullish trend. What is this fair value gap here? This would have been a second entry. This would be a second entry. This would have been a third entry right here because the fair value gap entry right here. You know, a third entry right here. What was the other? We wouldn't use this, right? What was the other entry right here, right? Fourth entry right here. So you would have maximized your profits, honestly, like off of just fair value gap entries. You know, like it's simple stuff, guys. And it does it all the time. It does it all the time, everywhere. Here I identified this as a bullish trend already, as you can see. If you will like just off of that bullish trend, I can find another fair value gap and enter. Look, fair value gaps here. 1, 2, 3. What the price do? Dig deep into the fair value gap, flew off. Is there a fair value gap here? Yes, but price never went down there and touched it. Fair value gap is here. 1, 2, 3. Boom. No, remember, if the bodies don't go past the fair value gap, they're still good. Look, the wick is still held, and the body closed above here. So can this be an entry? Yes, fair value gap entry. All right, this one, yes, there's a fair value gap, but guess what? Yes, there's the fair value gap here, but guess what? Price went back all the way down here. So you really wouldn't enter this. You could if you was more experienced, because we could use auto blocks here or go on a lower time frame to find a different fair value gap. But in this case, I wouldn't enter this. I'll just leave it alone. And look, even if you left this alone, right, another fair value gap formed there for you to enter. So you're not really missing out. It always gives chances. Look, even this tiny fair value gap down here. As soon as price touched it, 1, 2, 3. As soon as price touched it, see. As soon as price came back down into it, it flew up, never came back. Easy stuff. Same here with the bearish trend. I would identify this as a bearish trend. Let's see fair value gaps here. Look, what is this? Instantly 1, 2, 3. Boom. Stretched it out. What the price do? You wait. It went into it. You would enter the sell, hold all the way down here. You know, like stuff like that. It just would this be a fair value gap? No, because this wick ended up touching all the way up here to this wick, so that's not a fair value gap. You wait again. What is this? Another fair value gap. 1, 2, 3. Take it, stretch it out. You wait. Yeah, it looks like price is leaving you, but guess what? It came back up into this fair value gap once again, and you would have been able to enter. Stop loss would be above the first candle. Hold, went all the way down here. Would you use this as a fair value gap? You could, but guess what? Let's do it. 1, 2, 3. Yeah, so this is a fair value gap. Would you use it? Yes. Why? Price went back up here. Actually, no. Let's see. Okay. So would you use this? Yes, because look, this little wick, the what, 4, 5, the fifth candle went into it, and it dropped. No. So that's how you identify fair value gaps. I'll do more videos like this. Or you guys can just check out my channel to go find more videos out for fair value gaps. Thank you.